Let's see. I'm sorry. I'm having a little difficulty here. It looks like we're good on my end. Let's switch this over. I never sleep. My boy Collins, how are you? Hope you guys had a great day today. Okay. I'm just making sure everything is working and everything is on par. Guys, thank you for joining us. I am Justin. This is the Ivy League live stream. Thank you so much for joining us. If you could, hit the like, hit the subscribe, hit the notification bell. It'll let you know when we come on. We give you guys some information about the day, stuff about tomorrow, trade ideas. We come on, we chart, which is going to be my main focus tonight. I stress on trade when you can, not when you want. Guys, again, it never ends. Life happens. I did not expect to take my grandmother to the hospital tonight. All right. She's okay. She's doing all right. She's going in for a checkup. So that is, unexpectedly, I was out and about and my phone wanted me to download a whole bunch of shit, more shit than I need, to inform you guys it might not be till 9:30, 10 o'clock when we start the live stream. So let's get into it. Again, thank you guys for joining. If we could, like, share, subscribe. I hope you guys had a great day. What a day. What does this all mean? We're going to get into the Fed. We're going to get into some earnings. We have Adobe earnings tomorrow. I think we had Lumina, or not Lumina. We had some at the bell. Look, is it froze? Did my camera freeze? Hold on. Give me 2 seconds. I gotta figure out why it's doing this. And it looks like, let me see. Can you guys, Collins, I'm not sure if you're there. What's up, bro? You let me know if my, it looks like it's froze. I don't know why it does this. This is why I don't even want to use it anymore. Or I got to figure out why it just does this randomly. Yeah, it's froze. All right, well, you guys get to look at my face. Haha, but what's up, my guy? I never sleep. Guys, thank you guys again for joining us. I'm sorry. Remember to go so this thing just I don't understand why it's continuously freezing up. I don't know if it's the way that I'm doing something. I hate that this is happening because I would like to get through a live stream and get through it without any issues. Okay. Let's see here. No. What the hell? Oh, hell no. Undo. Edit. Undo. Edit. Undo. Hey. Again, I don't know what's going on with this because it just messes up. So I'm not going to sit here and spend a whole bunch of time with it. I'll figure it out. It is what it is. How's everybody doing tonight? Hope you guys are great. Hope you guys are good. There we go. Done deal. Bye-bye. Later. All right, so screen fits. Let's see. This is so crazy. This is exactly what I wanted to avoid, but guess what? Life isn't perfect, okay? Life isn't perfect. I'm not perfect. If you're perfect, could you let me know what the cheat code is on that? Because I could use some. I could use a little bit of perfectness. Bro, Collins, what's up, bro? I hope you're doing good tonight. Thank you for showing up, man. You show up every day, bro. We're here to get it. Let's get this money. So what happened today? The Fed. Sorry again for the intro, but the Fed. Let's get into the Fed. What happened? So Powell comes out. Let's go to, and I should have already had this set up, and I didn't because I'm just rush. The Fed. So let's go pull this up. June 15th, right? What's today? The 14th. Let's go to summary of economic projections. When is this? This is March. This is good. Remember what I told you guys? Fed. Wait, what? 1.9. Yeah, right. 1.9. So we had Powell today, guys. So what happened? We had a pause. Obviously, if you live under a rock and you don't know, we have a pause. All right. Excuse me. So we had a pause, and this is not what I want. This is not what I want at all. News and events, press releases. Okay. Maybe, you know what? Tomorrow's a new day. Tomorrow is a new day. Tomorrow's a new day, and we're going to get through this. We're going to get through this together. Okay, so what the heck is going on here? Okay, summary of economic projections. All right, so here we have the summary of economic projections. So what I want you guys to know, all right, first off, this dot plot, it always changes. Like, you have somebody up here at 6 1/4. 6 1/4, huh? Who's the wise guy, huh? Who's that wise guy? They should bring him out and show his face. You guys want to have a guess on who that is? I'm going to take a guess and say, I don't think it's Bullard. I think it's the New Yorker. I think it's the guy from New York. Or, what if it's Powell? Or what if it's the Atlanta Fed? Or what if it's what's her name? I'm just kidding. Anyway, guys, so look, I told you guys to watch something to watch for. June 14th, 2023, to make sure we're reading the right statement. All right. So they have GDP, like I told you, unemployment rate, PCE. So the PCE is what the Fed goes by. Okay. PCE is what the Fed goes by. This is an inflation data. I told you guys, well, Powell said that PCE was too high for them. All right. Now, what Powell said was it makes a lot of sense on what he's trying to do. Now, but how does the market relate that? Okay, how does the market take that? I'm going to get into it in a minute. I told you guys the second page or first page, whatever you want to say after this paragraph here, the first page of the good stuff, second page of the release. Federal funds rate for 2023, 5.6, they raised it. I came on here and I said, yeah, I'm pretty sure that they're going to raise it. You want to watch and see where it's at. Where it's at. Got 2 turntables and a drone, pal. 5.6. All right, so look, 5.6 is what they have on here today. I want to go back. Let's go to January 2023. Summary of economic projections. Fed. All right. They have March. No, I thought we had one in January. Because I already know what March 16th says. March 16th was... See, that's 2022. Did I not put 2023? John. John. Hey, John. SOEP Fed, January 2023. January 31st, February 1st, FOMC meeting. FOMC statement. Come on. Come on. Come on. No? Oh, they don't have it? Or increasing the target range will be appropriate in order to attain. So what I'm trying to show you guys, okay? What I'm trying to show you guys is where they were the first of the year, where they were in March, and you know, after the banking issues, okay? Okay, so here we go, I think. This is so rate by 25 basis points, bringing the target range to 4.5 week continues. So what I'm trying to get to is year end. Okay, year end. I could have swore we got this, and for some reason it's not bringing it up. Maybe I have to go back to the other one. Statement longer term. Press conference transcript, minutes. Okay. All right. And anyway, I could have swore that they were already wanting to be around 5 to 5.5. All right, by year end. I'm going to get it right here. All right. I was thinking that they were wanting to be at minutes. Just bear with me, guys. I know. I'm sorry. This is probably hurting the channel to get people on here and stuff. But it's important because I want you guys to be able to put this stuff together. All right. And so that's in minutes. Freaking Powell's killing me, man. Information action. Alright. Okay. So it is what it is. Okay. It is what it is. Alright. So what I'm trying to get at is the fact that this is where the Fed has been wanting to get to pretty much all along. It was around 5 to 5.5 basis points year end. Okay. So technically nothing has changed. Okay. So they freed up the banks. We got the SOEP in March after the banking stuff, and they had lowered it to 5. Okay. 5.1. So technically, we're still on track from the beginning expectations. All right. So Fed funds rate again 5.6 January 2020 or December or 2024 4.6 3.4. But look at this longer term, this longer run. Like, do you guys really think that we should be thinking about 2.5 interest rates in the longer term? Is that just like a random number they put on there? Like, I personally think this Fed funds rate should say 5.6 or so. Year end 2024. Hell, even have this year end at like 5 3/4, 5.8, 5.9. Okay. And have this, because we're definitely by next year, and we're going to show you the data. All right. We're going to show you the data. You should have this around like 4.6 sounds good. Okay. It does sound okay. Maybe 4.8 to 4.5. So 4.6, meet in the middle, roughly. But 2.5, 3, 4, 2.5. Okay. By 2025, we should be there, but this number should be up higher. This number should be up higher. Okay. You're going to continue to have an inverted yield curve if you continue with this 2.5 longer run. It makes no sense. It makes no sense at all. I'm looking at the camera like the freaking camera's on. Leave it to me to do that. All right, so guys, what I'm trying to say is I don't know if they come up with these numbers like, I mean, I know they meet the day before and the day of, but 2.5 restrictive policy, what? It's not restricted. Like, so listen, if something goes wrong in a further run and this is like, if you're really going by this, okay, maybe I'm missing something. Again, I'm not an economist. I'm not a financial advisor. But what if something goes wrong? Where are you going to go? Negative? Are you going to bring rates down to negative again? 0? And then find yourself in the same situation? Okay, I don't think this is cool. I just don't think this is very smart. This here still needs to be 4.5, 5.5, 6. 6 is probably too high for, I don't know what they're going to consider the longer run. 10 years? 5 years? Okay. So what I'm getting at is, yes, you should have at least your 5.6, hell, 5.8. And we know with the data that I'm about to show you next year, even if it's this time next year, guys, that this interest rate policy should be down. Hell, it might even be 4.5 to 4, and then possibly like 2025. Probably that. Then maybe you want to put your 3 to like 2 and 3/4, 2.7 right here in the 2025, because you're gonna lower interest rate as unemployment because this data is backwards looking. Okay, this data is what already happened, not future. Okay, the market and everything prices the usually 6-10 months forward looking. So this right here, this Fed funds rate makes no sense to me. That's one. All right. Because what I'm trying to relate to you is if 2024 we get into our recession, quote unquote, whether it's a recession that hits in different parts of the economy in different sectors, or if we just have a flat out mild recession and everybody somewhat feels it. We get unemployment back to where it's supposed to be, hell, maybe a little higher. That's okay because it's still not bad. What's regular? Like 5%, 5.5%. That's not bad. Okay. So worst case by the year end. Yeah, man, I appreciate you, Collins. Like I say, man, bring your people. I mean, does it make sense though? So what I'm getting at is like 2024, if we should have a recession. And again, I'm going to show you the data. So 2025, 3.4. Again, and I still have not yet to like fully go over this data. I do kind of know what's in the past, but because of things that happen like this, so nothing's changed because when we came into the year, their target was about 5.25, 5.5. So this is just back to where it was. And the summary of economic projections the last quarter we got them, it was saying 5 because of the banking issues, and they didn't know how systemic that was going to be. So my point is if 2024 we get our recession, then 2024 and 2025 you should start to like, you honestly 2024 you want it like year end going into 2025. You kind of want to have like, let me go back to my thoughts. Okay, 2024 we have our recession, whether it's next year, okay? Because this is year end, we're going to say. This is for December, okay? This is for December. We're going to say this 4.6 because they have March projection and then Fed funds rate 4.6. So in March, they're saying here, okay, we should see a recession because why are you going to lower interest rates? If nothing happens, your rates are still going to be there. So the Fed's telling you that the data I'm about to show you is probably going to come true. All right, the chances are highly likely. So you should have this again. Like March would be 4.6. Longer term, 4.6. It should actually be around 4. But they don't want to show you that and say, okay, so this is the timeline for their recession. 3.4. No, it needs to be the 2.5 should be there at 2025. And then this longer term should be 4, like 3.5 to 4. Because what it's saying is, what it should say is we're going to expect somewhat of a recession in 2024. We're going to cut rates. We're going to leave them there for help. See, that's the thing. You don't know how long it's going to take. So let's just say we leave it down for like a year. Okay, 8 months. And they lower it to like 3%. That's still pretty damn good. 2.75. So 2.5 to 3%, we're going to say, just to get out of the recession. Boom, cut them quick. And then we're going to say year end of 2025. If we do this into 2024, by the following year, we actually want to make this 2025 4.6, 4.5, 4.3 to get out of that recession and get out of the interest rates that we lowered because of the recession. And then this longer run should still be 4.25 to like 5.25, or 4.75, so like 4.8 to 5.2, 5.3. Okay, 2.5 longer term. So we're just going to keep an inverted yield curve for, is this what, are we Japan? Because this is Japan for you guys. This is what Japan does. They keep rates down. There's a whole system, and I tried to bring it up to you guys the one night, and I don't think I got to it. All right, it was the whole thing that they did in the 80s and the early 90s to dictate what the dollars do in conjunction with one another. Okay, because they want a lower dollar. They don't want it so low that it's just worthless, but they would like other countries just a tad higher than us, because what that does is that when the companies sell into other countries and they convert that to US dollars, that allows them to have more instead of less. Okay, because if our dollar's worth more and their dollars are worth less, that means they're bringing back less dollars when they convert it into the United States, because it takes less dollars to buy that item, and then they convert it. Our dollar's stronger, so it's just common sense. Maybe I'm not explaining it right to you, but so let's go into GDP. So I'm going to get into Powell. Changing real GDP, 2023. That is a 1. Let's see if I think they have it up here. In conjunction with the Federal Open Market Committee (FOMC) meeting held on June 13th through the 14th, 2023, meeting participants submitted their projections of the most likely outcomes for real gross domestic product growth, the unemployment rate, and inflation for each year 2023 to 2025 and over the longer run. Each participant's projections were based on information available at the time of the meeting, together with his or her assessment of appropriate monetary policy, including a path for the federal funds rate and its longer run value. So no. So again, they have price stability and maximum unemployment are their two key things. So once we start getting into a recession and unemployment starts to go up, boom, that's the next thing, because that's all they care about, price stability. And it's not all they care about, but they want price stability and maximum unemployment. That is their goal. That is why the Federal Reserve was created. Change in real GDP. All right, guys, this is where it gets good. 2023 median is roughly at 1. Okay, now I have to look back again. I have to bring up March, the one prior, where it was, because they raised their GDP estimates. Okay, they've raised their GDP estimates again because everyone thought this first half of the year was going to be when the recession hit. But if anybody looks at the data, they would see that there is at least a 1-year lag from peak, not from when they start, but from peak. We could probably go into a little bit more depth with it. Okay, so their PCE for 2023 is still above 3%, even though we are already there and it's half the year. So we should just about be getting close to a low 3, 2 3/4 handle, even though Powell says that it's still sitting up high. All right, so here's your dot plot. This is every Federal Reserve member for the year. 2023, this is where they want to be year end. Appropriate monetary policy, midpoint of target range or target level for the Fed funds rate. Okay, somebody here wants 6.5. I don't totally disagree with them there. Okay. These people that are up top are trying to do the right thing for the ordinary people that don't have much, that would like to own a home and can't afford a home because they continue to get priced out of it. This would allow them to be able to get a home at a higher interest rate, something happened, and then refinance at a lower rate. Bang, you kind of got yourself a good deal being able to afford a home. All right. And 2024, 2025, and the list goes on. I don't understand why they're here. Maybe these people, whoever these 1, 2, 3 people are, be cool if they put names next to them, but they're not going to do that. They're on to it because they know 2024 and at worst case, like end of 2024 going into 2025, we should have unemployment rate should tick up. Okay, it's like not should, it's more than like it's going to. It's going to, because the tightening up of money is going to cause its little roots between not only us but other countries. I don't want to spend too much time. So what's Powell trying to do, guys? What is Powell's ultimate goal? Powell's ultimate goal. I think Powell sees, and I've brought this up again. All right, peak. So we have Fed funds rate in red. You have the blue line, which is unemployment rate. All right, this was peak rates. 2019. Now look at the blue. You go 1 year from peak. Now they start lowering and it goes down and then bang. And it happens like that. Peak rates. Okay, August 2006, boom. August 27, they cut. Interest rate starts. 1 year lag. Again, here, boom. Peak rates, 2000. Unemployment goes in 2001. And that's from peak. Okay, and one thing you also have is a peak rates also are hitting when? Look here, Fed funds rate, and unemployment is pretty much at its, so they peak when unemployment is also at its low, guys. Look, peak rates, boom, unemployment's at its low. Peak rates, unemployment's at its low, just about. Okay, I am reading this right? Yes, no, yeah, peak rates, unemployment's at its low. Peak rates, unemployment's at its low. Peak rates, and that, I don't know what the hell, that was something going on there. Look, peak rates, look, to a T, guys, 1989 to April, unemployment rate, 5.0, interest rates, 9.85, peak. Now again, the Fed funds rate is in red, the unemployment is in blue. Look at that, guys, almost to a T. As soon as they're done, is when unemployment starts to tick up. All right, it doesn't always have to happen like that. You know, this was Volcker. This is who they said they wanted to be like. They wanted rates all the way up here, guys. They said that we want Paul Volcker this shit. Could you imagine interest rates being up to damn near 20%? 19.10% was the Fed funds rate. That means the bank is borrowing at 19% and at least tacking on 2, 3, 4% onto you. Yeah, for sure, bro. And I'm going to it. Just there's a lot, man. Trying to do on Facebook, Twitter. What is it? Fucking. I don't even know why I say what it is. TikTok. Oh, no, you're absolutely right, bro. I appreciate everything. It's just it takes a lot of work, and then in between all this, it's like I got to come up with my own trades. I still got to make money. You know what I mean? I got to put in the work. It was a little hard today trying to go over the Fed meeting and have it playing, and then lining up my trades. You know, I kind of sat on my hands this week, but tomorrow won't be the case. Tomorrow and Friday will not be the case. And we're going to go over some charts. But you guys should look at this and then throw up Fed funds rate, GDP. Again, this is FRED, Fred. And you guys can pretty much have at it. It's a good site. You can put in whatever data you want and just look at it. And kind of you got to put the pieces together. Because I heard a big conversation today, guys. What is the Fed doing? What is this? What is that? Okay, so Jerome Powell literally had stated. He said we started at 75 basis points. We took 4 of them in a row. And then we went to 50. And then from 50 we went to 25. And then what he's saying is from 25, where do we go? Do we just do 25 and then stop? So no, he's going to take that last 25 and he's just going to space it out. And it's really smart. And I applaud them for that. That is smart. I mean, you don't see it anywhere on here where they've done that. You don't see that on here anywhere. They just leave it. They just stop. So what he's going to do, he's going to let like a month go by. And I'm telling you, if we're still in the same position, count in that 25 rate hike for whatchamacallit. Okay? He's going to let another month or two go by. Maybe they're okay with 5.25. All right? Maybe they do get to 5.5. I think they want to be here, 5.24. You see that? That's where they ultimately want to be, is 5.25. So I think he's going to pause, give it a little time, give it another 4 or 5 weeks, even though it's not going to mean much for a quarter of a basis point. They're going to give it to us. And then maybe do they give us the other one? The other one I'm not so sure about. Okay, because the Fed knows, guys, they've backstopped the banks from getting blown up. They've worked. Nobody expected them to like gradually come out of the 25s just how they went into it. They went from 75 to 50, from 50 to 25, and now to get out of 25, we're going to piece our last 25s out. They're good at what they do. This is why Jerome Powell still has a job. This is why Trump hired him, because he's actually really good at what he does. So do the markets start to price in the other 25? Or do they say, you're not going to get to the 25? Well, they might get to the 25, but what about the other 25? Because there's a total of 0.5%, 50 basis points that the Fed wants to get to. All right. So let me take a drink real quick. So I honestly, guys, I got to tell you that everybody is just questioning this. Why would they do it? Why would they do this, that? That's stupid. Just give it to them. Get it over with. But honestly, Jerome Powell explained it perfectly. Like, it makes sense. It literally makes sense. He's wanting to ease out of restrictive policy. And it's, I don't know who thought about it, but again, just whoever thought about backstopping these banks by, pretty much just fronting the money to the banks and just taking the bonds. And it's not like the Fed has to take a loss. They don't have to sell it. The Fed could honestly just do whatever the hell they want. I mean, they're the Fed. The government, they could literally do what they want. It's not like people are going to the Federal Reserve and their bank account is at the Federal Reserve and the Fed literally has to worry about liquidity. They do, but they don't. Okay. And he mentioned the Treasury General's account that's getting ready to happen. There was a guy that talked about liquidity on CNBC right beforehand and was talking about how they're going to do this. Because what they do is, if you don't know what a reverse repo is, you'll have to look it up. Now, this kind of stuff, you start getting into real banking shit, and I don't know it. I'm not your guy for it. But my goal with this channel is to be able to bring somebody like that on here to help explain it to all of us. I just need likes. We need to get some people on here. And, you know, we're going to sit here however long it takes and get, you know, we're going to go through charts, whatever we got to do to get ourselves better and ready for the day, and do it so you don't have to pay an assload of money to join a group, only to be left with nothing. Okay? Maybe it was fun, but was it worth all that money? Okay? Ivy League Trading, YouTube.com. Thank you guys for joining us. So, I think what they're doing is really, really smart. Okay, so the reverse repo, if you don't know what that is, so banks, there is an overnight lending program where the banks will lend, or pretty much lend to the Fed overnight, and they will get a percentage in a 12-hour span off of that. Like, if you want me to, real quick, let's go to, because it's important, because it's mentioned in it, and he talked about it. We're going to go over charts. That's the important part, guys. I think we have some nice choices. So reverse repo is the final step in the repurchasing agreement. Closing the contract. In repurchasing agreement, a dealer sells securities to a counterparty, which is the Fed to the bank or the bank to the Fed, with the agreement to buy them back at a higher price at a later date. So the Fed comes in and buys it from the bank, and then they buy it from the bank, and then the Fed buys it from the bank. So the bank gives it to the Fed because the Fed's purchasing it. And then when the Fed gives it back to them, they give them an interest rate. It is a short-term funds that are a favorable interest rate with little risk of loss. Okay? What is the reverse repo? You guys will have to look this up. This is pretty much it. It's just an overnight repo where the banks give the money to the Fed overnight, whether it's deposits and everything, and then in the morning, they have it back with like 0.08 interest or so. They mentioned it in there. They mentioned it literally in the summary of economic projections. All right. Or in the, whatchamacallit. They mentioned it because I read it over. Accessible materials. We're going in the charts right now, guys. I'm sorry for... It's in here because when I read everything this morning, or not this morning, but this afternoon, it was in there. It was definitely in there. But you have to look at this and look at the numbers. So look, so there's two different things here. So the paper, everybody said that this was hawkish. What about this is hawkish? I'm asking you that. So don't listen to CNBC. If there's people on YouTube talking about this was hawkish, like, you know what I mean? Like, this is crazy. Like, what's going on? Guys, it makes total sense. He's just easing the last two 25s and being done with it because they know the lagging effect. It's going to take at least a year. People are saying the end of this year, guys. I still think, honestly, I want to say like next February or March is when it happens, guys. Honestly. It may take that long. Okay, another good point. So, why did they raise GDP? That's what I wanted to get into. Why did they raise the GDP? It was like zero or a half or something, if not negative, and now it's 1 or something. Because it's summertime. You have a lot of people going out and doing things. The economy picks up. Okay, it's not cold out. People go out of their homes. You're on the East Coast, Mid-Atlantic, you go to the beach, you know, you have people that go out and cut grass, and like the economy gets going in the summer a lot more. So that's why the GDP was risen because of the time of year that it was. Okay, that's still no big deal. They make the GDP raising it like it's a big deal. No, the GDP should. And not just here. Think about the other countries that, oh, it's summertime. The unemployment's great. Okay, everybody's working, everybody has money. So right now, people are going to be going out and doing things. Now, as we get some time in with these interest rates, then you're going to start seeing a slowing. Already, we're seeing the slowing. We've discussed it on here many times. It's just at the rate that it is, it's just very slow. But it's there. It's peeking its head out. Let's get into some charts, guys. So what did the 2-year do today? Look at the 2-year, guys. Sorry. Like I said, I'm going to be working on the stream and stuff like that. I thank you guys so much for bearing with me on everything. So the 2-year risen. Let's see what the 10s are. So you have 4.7% right here. You peaked at 4.8. So we're going to say 4.7. What's the spread between the 2s and the 10s? US 10Y. 3.8 and 4.7. You're back almost to 1%. Can I give you guys a fun fact? Let me show you guys something here. Check this out. All right. This is why it still may take time. US 2-year. Let's go with the US 2-year. All right. Let's go to a weekly chart. We're going to go to a weekly chart. Okay. I have nothing on my screen because I need to refresh. Let's pull this up. Bada bing, bada boom. 1989. That's far enough. Look at the downtrend we're in, gang. Look at that. Look at that downtrend. All right, so I want to move this over. Now let's intersect this with the SPX or the SPY. Same difference. Of course, it's going to be difficult. Of course, it's going to be difficult on me. Are you kidding me? Let's just look here. How do I do this? How am I going to do this? God damn it. See, on my other computer, it's so much different. Okay? It's so much different on my other computer. So let's do this. So what do we have? We have 2020. Let's go to 2018. So right here, you guys probably can't see it. Of course, it's going to go down if I make it wider. So I'm going to do the best I can. You guys will just have to bear with me. There we go. There we go. I might come down just a hair. Nope. Too much. Hold on. Because this is important, guys. This is important. So, this is the 2-year interest rate. This is US 2-year. If you don't know how to, the ticker is US02Y. You can always just look at my screen and see what the ticker is on TradingView. Now, this is a weekly chart. So the candlestick is the 2-year. The 2-year peaked in November of 2018. Where did it peak at? Roughly, I don't know, because it's giving me the percentage. I should change the side. I have it on my other computer that I don't have to fool with this shit. So look at the peak here, guys. So the 2-year peaked, and the S&P, SPX, still fell. Okay? We come in, let's see. So it peaked here, and then we had a fall. All right, so what happened here? We peaked, or this technically, what is it? It should be February into March. But here, we peak, okay? We peak. Let me go back, because this is only 2018. Again, remember this. November of 2018, the 2-year has peaked, and the S&P did not put in the low until December. Until December. See the low on the SPX? And that's the peak in the 2-year. Right there. A few months behind it. Alright, so if we go... Now, how in the heck? Let me see. See, if I move that, it's going to just move it all. Okay, what do we have? Right there. So you can see here the 2-year again. The 2-year peaked. When did this thing peak? This thing peaked in June of 2006, guys. It peaked in June of 2006. You put in your low here. A little bit about it, but the S&Ps kept climbing. The S&Ps did not put in their peak or their low until 2009. What do you have here? You have a peak in 2000 of the 2-year. When was the low in the S&P? It wasn't until 2002. So the 2-year peaked in 2000. It wasn't for another 2 years until the low of the S&P came in of September 2002. Same for 2008. The 2-year peaked in June of 2006, the summer of 06. And then, of course, we know it was about 2.5 years throughout the 08. And then the S&P did not, bottom until 2009. So it was really about 3 years. And 3 years is 3 years because that was a pretty bad time. It was just a disaster. Let's go back. Let's go back even further. Because I got one right here. Well, it's just not lined up right. So that's all it's giving me. Let me see if I can go in. Okay, again, here is the 2-year. 1989 was the peak in the 2-year. You didn't get your bottom until 1990, 1 year afterwards. That is your bottom in the S&P. Okay? So the 2-year peaked in March of 1989, and then the S&P did not put the low in until October of 1990. So about a year and a half. Now if I go, where are we at? So we're in 2022. So what am I getting at? So far, the peak was in March. So if you go back and you look at it on a different scale, that's easier to look at, and I've looked at them. Guys, the 2-year yield has never peaked before the low in the S&P. Okay, the low in the S&P was October. The 2-year yield just peaked in February, March. We just peaked here. That's June, but I don't even know what's going on now because I thought I got rid of the SPX. All right, so I just wanted to bring that to you guys' attention that the 2-year yield so far, which times have changed, guys. That's because it's on a 3-minute. That's why. So everything is different. Now, it might take time. So here's your peak in the 2-year was in March, okay? We have to see in a year and a half, 2 years. Do we break the 350 low? I'm going to be honest. I think this might be one of the first times that it doesn't peak. But look at this parabolic move, man. They're not stupid. These bond guys know. They're the smartest guys in the room. That's what they call them. The bond guys are the smartest guys in the room. Okay? Could we have a 2-year yield peak before or after the low is put in? We could. We could. But I was thinking last night and I wanted to get this out. Okay? So right now, what do we have going on? That's like going to make a shift in economic in an economic sense. So you just had this government stop the loans for the college kids, like, you know, where they're going to have to start paying them. What else? I think you were getting, if you had kids, I think you were getting a $300 check, tax deductible type things. That's came to an end. So all this money that other people had to help earnings out will be no more. So hold on. Of course, I'm out of coffee. So with that said, I would expect for us again to start looking what could be our next catalyst. I honestly think it's going to be earnings. I think earnings are going to hit, and then we're going to get like an unemployment scare for a recession, because earnings are going to see this extra money that was there for people from not having to pay their college tuition every month. They're not getting that extra $300-400 a week. You know, this stuff really plays a big role in earnings because that's extra money people have. It is no longer there. All right, things are going to go back to how they used to be. And when people got to start paying bills, and let's say these people that had the college tuition for free, what if they went and got a car and now they can't get a car? They can't afford their car note, or they didn't save it, or some issue. There's going to be issues. I think if we give it enough time, I think they're going to start worrying, and we actually might see 350 again. I just think that it's going to be, I think we're going to get our pullback, and I don't think it's going to be until next year around this time, guys. Don't quote me on it. I know I came on and I said I think unemployment may start ticking up around August, September, October. But honestly, guys, I'm going to give it until February or March of next year, guys. Don't quote me on it, but quote me on it. I'm saying it here right now. Ultimately, I expect us to be like in the middle of it. Maybe it peaks its head beforehand. I think in another 6 months. So that's going to be January. Okay? So next January, we're going to sit, or June, but in January, we're going to sit here and we're going to look back at what I had just said here in June. And I'm going to know this because this is what I said about CPI last year. All right. And I said, this is when we should get our best number. And it looks like we did, other than PPI, because PPI actually came in under like last quarter or last month. And then this month it was a little bit not as good. So, what about next month, guys? I just want to get all this out real quick. Next month, don't be surprised if we get a higher than expected CPI number, and you're hearing it first. All right. Next month, I think we get a higher than expected reading for CPI. It makes the market a little worried. And then, what is it? June, July, August. And then August, we get a better number than expected. Just let's see if it happens. Okay. That's my expectations. I think we come into July. We get our CPI reading for July. And I think July's might be a little bit heavier than people are going to expect. And then they're going to get in a worry. Maybe the market pulls back. Whatever happens, we get our rate hike. Okay, because then the Fed's going to say, look, we got a higher than expected number on CPI. See, I told you guys it's sticky. I'm going to do the 25. And then August comes and it's back down. Why do I say this? I will tell you guys if it happens. I'll tell you now. Because this was the flow of how CPI was last year. Let's just see. Because we got our June reading that was our highest reading was last June. The July reading was not as bad. Okay, it was under. So I expect next month that the CPI reading come in a little bit higher. That includes the Fed giving the 25 basis points as an excuse to give it to say, hey, I told you guys it's sticky, even though it's not necessarily sticky. It's just that the data was... It's just backwards looking. And then we come into August, and then we get a really good number in August, and then we're going into September, October, and then I don't think you get a meeting until October. So there's like 3 months there where we won't have the Fed, because they go on vacation. So that is my game plan, guys. I don't know how it sounds, but, we're going to see. All right, those are just my expectations. Look for a higher number next month. The Fed to come in and raise and give us that 25. And then, again, July CPI is back, cooled down. It's not as high of a print. And then possibly another little high number. But we'll wait for that. I just think July is going to come in a little bit higher than expected. All right, let's get into some charts, gang. SPY, what happened today? So how do you be a market technician? I always try to be a market technician. It's 10:51. It's already been an hour. I can't believe it. Jesus Lordy. Thank you guys for being here. Like, share, and subscribe. Tell your friends, tell your family, whoever you think might be interested, whoever you think would like to make some money. So I want to start specifically getting into doing just charts, going over trades, and being able to teaching people how to read the tape, level 2, and learning about what's going through your head in the middle of a trade. And knowing how to cope with a trade while you're in a trade. Once you've pressed the button and you're in it, how do you gauge the trade while you're in it to know that you're right? Or, your probability, really, and it helps stop your mind from running and thinking this and thinking that. You should be just calm as a cucumber, I guess. I only said that because it rhymes. So this is a 5-minute chart of the SPY. Let's go to the SPX, gang. I'm sorry. Let's see what happened. We drew some lines last night where we expected the SPY to go to. Let's see how that turned out. They're not there. They're not there. Okay. Wow, that's weird. The dollar. I know I did it on the dollar, didn't I, Dixie? Maybe I did it on futures? SPX /ES? Huh? /ES. I wonder where futures are right now, actually, too. I'm really curious. Damn it. Wow, that's crazy. That sucks. Because I thought I did something. And, alright, well, let's go look at the dollar, because I'm pretty sure that the dollar should still have it. I just want to see how what my thought and my measurement, what took place. Let's go to the hourly. Okay, so we're almost there to the target. So I was close. My target there was... It's still not over yet. It's not over yet. But that's pretty close, right? That's pretty damn close. I'm off what? My line was about 1024, and it's at 1026. So I was 2 basis points off. Not too bad, right? Not too bad. It's probably because if I would have went into it and measured everything. This is why you guys should learn to measure moves, and like, it's a learning process. It's not just about measuring the move either. There's a little bit more to it than that. It's about knowing like the movement and what are your expectations. And as time goes on, you're going to start learning the expectations, because market cycles is what changes expectations, you know? Yeah, man, for sure. Yeah, we're going to, bro. Like I say, I want to get we're going to do this, bro. I'd like to have you on with me too. Like I want to get something going here, guys. I have a couple different ways I'm going to go about it, but I want to make it for free. As free as I can. All right? If it comes at a very low cost, it'll be a very low cost. But like I said, I have some things in plan, you know. I want to have a place that people can go to that don't, like, guys, just to sit here and go through charts. People charge 12, 13, 14, 1500 to $5,000 a year just to be in a group to go over charts and shit, man. It's crazy. Nice. Good, bro. I'm happy, man. I'm happy, bro. That's my goal. Like I say, sometimes, so I have ADHD horribly, and sometimes I'll forget things or get off track and like drag on some stuff. But I'm gonna get better at it, because I watched back a couple times and I don't even really, I just want to make, I just gotta get better at what it is I'm doing. All right, so let's go over the SPY, guys. Let's look at the daily chart first. We always look out. We look at the bigger picture and then look in. All right, just so we get a broader idea. All right, we know that we're above all of our major moving averages. And if you don't know, these two circles are just kind of where I expect the SPY to be around that time in that month. All right, we'll see if we get there. We may not. This could just be a couple UFOs just hanging out up here, and we never get up there. So, let's see, 421. I'm going to take all the lines off up until 430. 422. I hate to do this, but I have to. I got to clean these charts up. I got to clean them up. It's so bad. I'll just leave them. Maybe I should just make them smaller or something. So look, we have a brick wall here, guys. I'm going to tell you right now, this, if it doesn't, because like I said, guys, you could get fund managers that are offsides that were still trying to short this market and now have to get long. Like, so they've had 2020 year where they had a shit job. They lost money. The 60-40 portfolio didn't work. The 60 equities, 40 bonds, they both lost money. This year, they're coming into the year. They're short, not long, because, quote unquote, we're supposed to have a recession in the first half of the year, and they don't decide to get long. And I think you did get a couple of them here get along. But I think, see this, guys? Do you see all that selling? Okay, yes, there's a lot of short selling in there. But look at the volume here. I mean, seriously, look at this volume. So what it is like all this volume that's leaving is going to have to come back, whether it's shorts having the cover or, longer term institutional stuff needing to buy. This is a lot of selling. There's still a lot of buying. Like, it doesn't look like they stopped buying at all. But this was more, I want to say, intraday trading and buying the dips than anything else. Especially right here. So once you pan out the volume, you kind of get a picture like, So we have an increase in volume on the way up. That's always good. So this rally may not stop until July's reading, unless something happens, guys, because of the banks. Nobody's talking about the banks. It was like the banks came, they got shut down, and you haven't heard a word from it. So, it is what it is. Things can still happen, guys. Overnight, any minute, things can happen. All right, I had a feeling that the SPY and them was going to try and roll over. I was kind of hoping that we would get our interest rate hike, and we didn't get it. Okay, so the S&Ps did fall down. Let's go see where the futures are just really quickly. And there was something I was going to say before I did this, but I just want to know where futures are at. So I have a head game. Okay, so it looks like we're putting in a range, kind of topping out. Okay. All right, 40. God damn, futures are already up here at 440s. That's insane. What's another $20, you know? So, 15-minute chart. It looks like a uterus, kind of. I'm just kidding. I love you women. I love women. Women of all colors and ethnicity, whatever the word is. So, how do I like to go about my charting and stuff like that, like a technician. What is this here telling us? Where's the close? Where's the high? Where's the low? Okay, so that's our close. That white line is our close. Here is our low. I think I put that there because that was one of my targets. So we never took back yesterday. Okay, we did not close below yesterday at all. Anytime. We actually opened up. We closed we were green, believe it or not. We finished green. I didn't expect that. It's not that I didn't expect it. I think what's going on here, guys, okay, with the Fed and the interest rates, I think them doing the interest rates is what's going to cause the market to come down. Like, or at least give a pullback. Because I don't think the market's worried about interest rates so much. Because obviously, the market only sells off when you have a bank say that they don't have liquidity. Like, they need, like, the FDI, the government has to come in so people don't line up at the bank and their money's not there. So the Fed telling the market, we're going to raise another 2 basis points because that's what we're going to do. We want to be at 5.5 roughly is where our year-end target is. And we're almost done. We have 2 more rate hikes left. And then we're getting into, pausing. 2 more, pause. And we're going to gradually give you the last 2 25s. Again, like I said, I think CPI comes in a little hot next month and we get that 25. We closed green. So is the market saying we're not coming down until something actually pops up and is wrong? And I think that's the case. As long as the Fed goes about their business and you don't hear anything about banks, you don't get a surprise in unemployment, which you can. That's always an option. Like unemployment just randomly could show up and be higher than expected. You got a glimpse of it last week. So this was almost an indecision candle, which is like you pretty much close right where you open and whatnot. But this is kind of a hangman candle. All right. They're buying the dip. Like I said last night, we pretty much came in and closed this gap. It's a small gap, but there's a gap there. Okay. Still got to be bullish, I guess, guys. We're going to see what tomorrow brings if we're able to reach up to new highs. I want to talk about NVIDIA, some AI stocks and stuff like that. I mentioned it today. If you've been long NVIDIA for however long, if you bought the dip on NVIDIA, they just closed at $1 trillion market cap. It would be wise to put some in your pocket. If it goes higher, you still have a position on. But if it comes down, because here's what's going on. You're climbing into an era of contraction. Like the future growth is not there. The future is contraction. There's a slowdown coming. It's coming. It's just going to take some time. So it could rally, but for NVIDIA to be $1 trillion, I think the expectations are really high. And when the next earnings come out, which we're not too far away, the end of, it's either July. I think it's the end of July we get the bank. So then we'll be back in earnings. Yeah, in the August. So, May, June, July. Yes. End of July. 1st of August is when we start earnings. So be prepared, guys. So put earnings on your list. Just have August targeted. Okay, have August targeted because that could be where some of these companies start to not produce. Or they've raised expectations and they don't meet them. And their stock gets crushed and gets hit from it. So we just came down, we filled the gap. They bought the dip today, guys. So until buying the dip changes, you got to buy the dip. That's all I'm just going to leave it at that. Until something changes, you can join us during the day and we go through it. and I'm going to do a better job at everything that it is that I'm trying to do here. It just takes work, you know what I mean? You got to put yourself in uncomfortable positions, and like, you know, it's just, you know, it is what it is. You know, I'm only human, and I will get better at this, cuz there's things that I would just want to focus on. And what sucks though, real quick, is like I hate these chart patterns. Like, I want like a range. I don't want just like this rocket ship. There's no support and resistance in this. And I think that's why it's tricky for people, because you have to pan out and go back to pretty much the daily 4 hour, you know? Matter of fact, I'm going to go to the 4 hour to be able to find like support and resistance. You know what I mean? Like, look how hard this is. So we're back up here. So we have a little ways to go. Do we top out up here? I think we do. I think we start topping out up around here. And when do we get there? We'll get there in, I don't know, shit. It could be any time. We could get a massive short squeeze, guys. I want to go over some stocks, not just the indexes. So the IWM. I do want to cover the IWM real quick. There's just really nothing for us to like look at. You know what I'm saying? Because like there's no real chart patterns to them. I will cover them again real quick, but there's really no chart patterns. Uh-oh, that's not good. That's not good. So the IWM is looking like it's wanting to go lower, because all these interest rates do is hurt them. So if we get interest rates, like if Powell continues with these interest rates, what are you going to see happen, guys? You're going to see the banks. You're going to see technology. If you guys don't know, the sector that gets hurt the most from interest rates is technology. Okay, technically, your financials should do better because they make more money. All right, and the financials haven't had a period of time where they've had sustained rates and to be able to collect a higher margin. Because if you just say 2%, right? Fed funds rate was at 0. The bank gets it at 2%. The bank then gives it to the person for whatever their credit is. If they got great credit, maybe they get it for 2.8, 3.25%, 4%. So if we go from 2 to 4 with the bank, and the Fed goes from 0 to 2, the bank goes from 2 to 4, that's 100% margins. They've literally got 100% on their return going forward. All right. The banks are supposed to do well in this environment, but when you go too high too fast, and what is too high? I don't think 5 is high at all. I think that should be the medium range. Honestly, I think high is like 8, 7, 7.75 to 10. Like, I think that's pretty high. Now 5, I think is still, you're able to have a sustainable economy. All right, so the banks play a major role in here, especially the regionals. So the IWM looks like it couldn't hang on. It tried. See, this is more, let me see here. Let me see. We have a pivot high right here that I'm taking notice to, which is after hours. And, like, I got to spend time with this, like doing it, whether it's by myself or whatever. That's a good spot. I like that. But this right here was from the previous, I want to say this is SVB, guys. This is when the bank started. No, this is 8/19/2022. Right here was the banks. So it's still taking back the banks. So we have a bull flag here. We have a nice bull flag on the IWM right here. Boom, boom. If we take this, and I think we reached our targets, why it's pulling back. All right, there's your bull flag. I know that tail is there, but whatever. Okay, and we take this, and we go up. There's our bull flag. If I take this hand, and I go here, and I take, I don't want to, if I take that and go here, where are we at? Right there. Bada bing, bada boom. Okay, now if I put a line right at the top of there, pretty damn close, right? And you got a double top right there, guys. Look at that. So that's one way to measure a bull flag, and that'll give you your expected move. With that expected move, if you get the move and it's not a failed breakout, then you would obviously look for it on the downside. You could also use the side of the pennant, which is the flag right here, the bottom to the top. Do the whatchamacallit there, which would probably give you this. It'll probably put you like right there, where the base is. So you still have the base, which is just the flag itself, the width of the flag, and then you have the bolt or the pole, which will be your range. So we have to see. It kind of looks like the IWM wants to put in a reverse head and shoulders, but it looks like it's making lower highs. Let's bring up this. So I am on the 4-hour, mind you. Look at this MACD. It's trending lower. It looks like it's trying to pick itself up. It is putting in higher highs. So that is kind of bullish, actually, in a sense. I can actually look at this both ways, and that's how you need to look at stocks. You need to look at it to say, if I were to go long, what is this chart showing me to go long? And then look at it from the short side. What do you see to tell you to take this stock short? Do you know what I'm saying? So you can come, because you need to have an unbiased opinion on your trade. You may think it's doing something, but you need to look at it and say, all right, so if I go long here, what are the reasons that I have to go long? What are the reasons that I have to go short? Chances are, if you have none to go short, you should probably be long. If you have 2 reasons to be short and 4 to be long, then you should probably be long. Do you know what I mean? So if they're even, if you have like 2 short, 2 longs you come up with, either you're not seeing the chart right or it's a no trade. More than likely, you just don't take the trade. It's not worth trading. You want to trade stocks that have relative strength, have a catalyst, and have meat on the bone. Okay, you don't want to just be like, oh, this is strong, and then it's like your resistance is $1 away. You can do that. You can scalp it, but that's just not. It's just not going to end well over time. You know what I mean? If you really want to make some serious money, there's ways to go about it. And there's still a lot of stuff I want to do. Like this weekend, I'm going to make a video and edit it and everything. And we're gonna go into options, because I think a lot of people, kind of, they buy options when they like. It's knowing what option to buy, when to buy options. Like, there's a little bit. So I'm going to delete this. I'm going to go over some charts. I'm going to go over the IWM for a little bit. Then I'm going to go over some individual stocks. This looks like, see, I was thinking that this is the lower end, right? Kind of no. The IWM has just got me for a loop. Let me see where my moving averages are first. This is why we need to span it out. Okay, so the 50-day didn't hold. It tried to hold the 50-day. This kind of looks like a bull flag. I'm going to go over the banks. I'm going to go over a couple stocks, and then I'm going to get out of here. We'll get up early. It's 11 o'clock. Thank you guys for bearing with me. If you guys want to stay, you're more than welcome to. If you want to put in some tickers in the chat, be my guest, all right, and we'll cover them. So the IWM, I would look for resistance up here at the 50-day if it decides to be weak. Let me pull up the 15-minute. It's just putting in higher lows. So the MACD was actually showing me that it might be a nice long, in a sense. But again, I don't trust it, because the banks, I think, are still going to struggle, and they're going to struggle with more. We have to see where we open up. I'm kind of curious how Europe, Australia, China, Africa, whatever, India. I'm really curious how they take this data from Powell. Okay. Supposedly, China's supposed to have some growth coming, stimulus. So we're going to look at EEM, which is emerging markets, which is like stocks from like Taiwan and stuff like that. So we have a higher MACD. I'm just going to wait on the IWM. I will look at this another day. It's just not, there's no pattern there for me right now. Because I want to say, like, if this is support, I can't trust it that it's support, because it's putting in lower lows. You put in a higher low here for the first time. Like, where's my resistance levels? You know what I mean? Where would I trade to? It's like there's no meat. Like, I want days like this. Jesus Christ, of course it's got to click. Like, I want strong days. Look at these bars. Boom, 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 boom. You got, what is that? Oh, this is WW. Oh my God, I'm so sorry. I thought I put in the IWM. Are you kidding me? And it was already charted? What the hell? WW. Holy shit. Oh my God. How foolish of me. How foolish of me. I'm like, what the hell is this? I thought something was wrong. Oh my god. It's alright. When we get some stuff going, the chat will be like, yo, wrong stock, bro, wrong stock. Alright, so we got our range here. Oh my gosh. Maybe I should just go to bed. Because I did find it weird that it was like up with the 50-day was where it was. Alright, so we're still holding this range. Heck, riser drops in pre-market. Is it based on people buying shares or from what I've read in the market makers adjusting prices? So listen, so the market makers technically don't adjust prices. Like, so a market maker's job, right? A market maker's job is to locate a buyer and a seller and to meet them. All right? Like the market maker just provides this. Now the market makers do, they play their orders. Because, like, if the market maker is trying to find a buyer and a seller, then they'll take a whole bunch of buys, they'll take a whole bunch of sells, and they're just trying to collect pennies, man. They're just trying to collect pennies. Like, the stocks don't move from market makers. Like, they don't move the stock, all right? You get institutional and retail, and retail's getting a lot bigger now, moving it. So, pre-market is literally just buying and selling. Like, there's no options. It's not even necessarily market makers. Like I said, because market makers, how do I say this? All right. So like I said, market makers, like even liquid, like times like this, and you'll see in the markets, like they'll be working with fractions and they're just trying to collect their fractions of all these orders. If they have like 1 million orders and they get like a fraction, like a 0.002% on each one for commission or whatever, you know what I mean? Then that's what they get. So a market maker's job is to literally facilitate order flow. Like if I want to be a buyer at this price, I send the order in, it goes to the NASDAQ, it goes to the New York Stock Exchange. Yeah, there's no options or anything. But also, and a lot of that buying and selling is also indicative of futures. Like especially like if you want to talk about like even indexes, but like regular shares of stocks also follow the overall market. So that's why I say like if the S&Ps are going up, okay, if the S&Ps are going up, you can expect like Roblox. And actually, and what is the S&P? What is the S&P? The S&P and even the market, the S&P pretty much is the market. It has the 500 biggest companies in the United States, but what which is stocks from the Dow, the NASDAQ, and the SPY. But what is the market? Like, what is the market? This right here is the market, and here we have Apple. So, in a sense, whatever Apple does, look at this fucking thing. Look at that thing, guy. God damn, that's insane, isn't it? All-time highs. Look at just straight up. What Apple does is usually what the market will do, because the weighting in each indice of like the Dow, the SPY, the NASDAQ, its heaviest weighting in all three of those is Apple. So pretty much what Apple does is what the market's going to do. All right. Now, it doesn't mean like, because you could always have news and stuff like that. So if I say the SPY is going up, okay, the SPY's been going up. It's on a tear. The Dow, same thing, and the IWM, it hasn't. Okay, well, why hasn't the IWM really been going up? Okay, now I'm going to get back to the SPY in a second. It's been flat, okay? What's one of the biggest weightings in the Dow, or in the IWM? It is regional banks. And what are regional banks doing? They're still down here. Okay, so whatever regional banks do, if they start getting legs, then you're going to see the IWM get legs. So if I say I want to look at the SPY and I say, all right, the SPY is going up. Now, let me go to Netflix. All right, because this is why I hedge. I put on hedges, and this is how you can too. So if the SPY's been going up, it's in an uptrend, and I go to like I don't know of a stock that's weak, but Netflix is pretty big. So I say, all right, Netflix is pretty strong. I like Netflix. All right, the market's going up. Netflix is going up, unless it gets news. Okay? So if I want to be long, that's why I say if I want to be long something, I want to be long the strongest stock. So I don't have it right now because I don't know something that's weak unless you guys do. But So the overall market, like the market is Apple in a nutshell, kinda. Like don't quote me. I'm just like quote unquote. I'm like making a joke, but I'm not. But Apple pretty much is the market. And what Apple does, the SPY does, and what SPY does is like, dictates what all the other stocks are doing. But again, it's weighted differently. So you could have healthcare going down, technology going up, and because technology's heaviest weighting and the heaviest weighting in technology is Apple, it's going to go up. And then healthcare is going down. So you want to be long something that's strong and short whatever's weak. So there you go. UNH. That's what was the XLV was weak. So if we have UNH, we play UNH. They've been on the downside. It might be a buy now. Look at that tail. All right. I could see why, like you said, those contracts were really expensive. It is almost a $500 stock. So that's kind of why I hedge. Like, but then again, so if the SPY's at all like coming up, like making highs and shit, why isn't UNH? Why isn't healthcare? Because the healthcare is the second heaviest weighting, I think, in the SPY. I'll have to look. And then it's banking. Okay. Healthcare is the second biggest weighting in the S&P. And then healthcare. So it's technology, healthcare, banks. So yeah. What news do we have today? What news do we have today? So we had Unity. Unity's been running. I'm just gonna come up with some stocks to go over. I missed this trade. I've missed quite a few trades that I could have had because I've been trying to do the stream and I'll get used to it. I'll get used to it all. But yeah, pre-market again, man. It's like your pre-market is just literally buying and selling. There's no options, and that's what happens during the day because we used to not have everyday contracts, like daily contracts for every day. It was like first of the month and end of the month you had Monday, Wednesday, Friday, and then the weeks in between there it was just Wednesday and Friday, or it would be like Monday, Wednesday, and Friday. No, that was just like I said, first of the month, and then the end of the month. I think you had front dated contracts that were Monday, Wednesday, Friday, and then the following week was Wednesday and Friday. That was it. That was all we had usually. Yeah, let's look at Target. There was supposed to be a takeover news for Target. Good job, man. This is where we want to be, where the news is. That's exactly where we want to be, where the news is. They said something about Bill Ackman possibly taking over. Something like that. Target's a good store, man, and I always tell my girl, like, they're slacking if they want to be Walmart. They just don't have as many, like, products. Like, they don't have, maybe yours does, but, like, the ones by me don't. Target doesn't, like, the ones by me don't have, like, a fishing aisle or, like, necessarily like an outdoor aisle. They have like outdoor stuff, but it's like inside. Like they just don't sell the variety that Walmart does. And maybe they'll get there, and maybe that's not Target's objective. I don't know. But I think that's why you're getting a takeover. Because Target has a lot of potential, and I just don't think that they're using their full potential here. You got a stock that's oversold. If they're looking for the market to go higher, okay, especially the sector. Oh, that's what I wanted to talk about was AI stocks. Then if that sector starts to go higher, which is consumer defensive, okay, which is your Walmarts, your Sam's Club, your Costco, all right. I want to see how this sector did real quick. Let's see. Maps, S&P. So consumer defensive did really well, and Target did good. So you see your biggest weightings, Walmart. So Walmart's going to be your leader. You have beverages, KO, Coca-Cola Company, Costco. So it's kind of weird Amazon's not in it. I'll have to look at that later. So let's do this. So you have Target here on the daily. So first we're just going to get our resistance. Like if we go to the upside. Yeah, I love Target too, man. I know, they do. It's like, it's a store that's just like primarily for like clothes, makeup, maybe some indoor housing shit, some school supplies, some, some melatonin, or like, you got your regular stuff. It's just when they go to like the outer things that really don't sell a lot, they have toys and shit. Target is Target. And I think that they are their own, they are their own company, and it's what they do, and but like I say, it's about revenue. How can we get more product, get more money, Growth, growth, growth. That's what the market's about. You're either a growth stock or you're a value stock. All right, so we are way below. This stock, I think, might be oversold, man. It just might be. I don't know what the news was that caused this. I don't know what it was. I'll have to look. But whatever it was, it's not good. All right, whether it's, I'll have to look. I don't know, because you still had this gap down you have not recovered from. Like, this is not good. This is why they're talking about somebody coming in and stepping in and changing shit, because this ain't good. This is not good for Target. And Target, like, I know they spent a bunch of money to get, like, Ulta and shit in their stores. We'll see if it pays off. So, let's look at the 15 minutes. So, we're just way below the 50-day. This will be our first target right here. Is the bottom of this base around 139. That's our first target of resistance. We got to try and get back up here. All right. That's the floor. I wonder if it broke it and then picked it back up. I wonder. God damn. That's crazy. Do you know what caused this sell-off at all? Do you know what it was? Like, I remember when it was selling off, but I didn't expect it to just continue. Like, look at that. That's insane. Oh, it was earnings, I guess? Or a day after earnings? That's so weird. Look at that, man. Talk about a short. What an opportunity that would have been. Look, just liquidate. This is liquidation, dude. This is not good. That's not good at all. So here we are. We have an area of support and resistance right here. It looks like it's trying to get above it. It's got to break this level, though. It looked like it. See, it looks like it held here. You have a flat top resistance right there. I'll zoom in. See how we have support here? And then resistance, resistance. Resistance, resistance, and we come up and we break it. It tries to break back down. It gets balled up. Now it's support. Where do we go from here? This is our first target right here, gang. See if we can get to this tomorrow. If the SPY has upside to it tomorrow, I would look for this right here to be our first target. Yeah, I'm going to look for this to be the first target on it, which is 135.50 roughly. 135.50. What's our next target? Got to pivot low here. It's just this now. Once you start getting into this sell-off, it's like, where do you go from there? You know, you have that whole upside. Yeah, I like Baba too. That's a good one. Yeah, it's at 89. Yeah, it was coming up to huge resistance. So, and I brought that up. Remember, I just brought up the stimulus and stuff with China. So that could have an effect on BABA. The problem with BABA is once it gets to a point, all right, the United States institutions have pretty much gave up on BABA. So it's going to be very difficult to get US dollars in this thing and get this thing back to running. And it has nothing to do with BABA. It has nothing to do with it. It's the country. All right, it's the country that has everything to do with it. Man, this thing has climbed, hasn't it? I do know what our area that we need to worry about is if we get into 110. This is our first line of resistance, and we get through here, cool. I'm with it. But I played the long, like I told you guys a while back, and it was like that 105 to 110 area, if I'm not mistaken, that it just couldn't break, and it fell back down. Maybe this time's different. Because I was looking at BABA, and it looks like it's putting in a reverse head and shoulders. All right. I'm going to draw it. It's not clean at all by any means. It's not clean at all. But, you know, it's kind of hard to put in. And what do I see here is that, like, dude, no. You guys see this left shoulder and stuff? Yeah, Baidu is too. See, it's the Chinese stocks that are, yeah, they had a little run today. JD, they're internet stocks. So let's look. So we're coming into the 100-day up here. Let's look at this, and then we'll go to Baidu and JD. So it looks like it just made the 50-day an area of support. I don't want to remove these in case So boom, boom. Because what I'm looking at is like, here was kind of 91, 91, 91, 91. Boom, boom, 95. So I played this gap up. This days where it gapped up and went to 110, I think, 120 and went that high. No, it was right here then. Yeah, 105. 105 was the kryptonite for it, and that's the flat top resistance up here. Let's go to the 15-minute chart. So the 100-day is right here at roughly 92.50. I just wonder how much Baba has left. I'm going to look at like Boeing real quick and a couple other ones. Like I want to find something that's putting in like where it's breaking a high and it's testing the previous high to go long again. Because the market is bullish right now. The overall market's bullish. So if you get a test here from 88 to 91, I mean that's $2. Like that's not, you know, I need something bigger than that. Like I need to get like, I need to get from like 90 to 100. Yeah, that's right. It did have some relative strength, but that's the thing. So when you have stocks that like have relative strength in a day and they're really strong, they might have a day two continuation depending on what the market does, but it may not do it as much as it did the day before. Like if you have a strong stock and you've caught it early, then the next day is when it really has its run and then it dies out. So like if we go to Nike, okay, because it's just hard for a stock to do that. So this was the day one. All right, so it's ran. We can see what it's going to do tomorrow, but chances are for it to do this again is just highly unlikely. There is a gap here. You guys see this gap right here? There is a gap fill right there. So I would still expect Nike to like calm its jets a little bit up here at 115. It's just like Target. It got liquidated. Put in a higher high. Build its base. Boom. I was thinking Roblox, kinda. Let me see here. Let's go to the daily chart. I hate that all these lines are on there, but let's think or swim for you. I gotta get ready and get some sleep so I can get up early in the morning and go over charts and go over some news. I gotta find something. I have to find something. So you have a consolidation here. Maybe Roblox is a short tomorrow, possibly. So look at this hammer candle. Look at that hammer candle, guys. Look at that. Look at that. Isn't that crazy? Look at the 50 and the 100. The 50 is getting ready to drop below the 100-day moving average. That's not good. That's not good. I think the 100 going over, or the 50 going over the 100 is a iron something. But I know the 200, like the 50-day going above the 200-day is a golden cross. I forget what the 100-day one is. I'll have to look at it. Let me go to the weekly and see what's going on here. Because what you have is like this stock IPO. Oh, there's a new IPO tomorrow too, guys. We'll have to keep our eye out. We're probably going to trade that. I'll probably be trading it tomorrow. It's like a bowl. It's like a pre-beverage thing. And I'm going to keep it on my list because after 90 days of trading, after 3 months of trading, that's when the shares become unlocked, and that's when they sell, especially when the stock is up where it's at. If it's still up there. I think they were saying today it was at like 30 times earnings, something crazy like that when it goes to IPO tomorrow as of this afternoon. So the bids were pretty much pouring in on it because they know dumbasses are going to buy it. It's prepackaged food. Like, this is not a technology company. At 30 times earnings for food? Are you kidding me? You're better off buying Costco or something. At least you know your money will be there when you want to take it out. So, Roblox is hanging on to the 50 weekly moving average. like I say, tomorrow I'm gonna find something. I mostly wanted to cover the Fed tonight. Oh, AI stocks. Should you take profits on Nvidia? I think you should. It's a $1 trillion company now. I think you got to take some off. If it doesn't pull back, don't worry about it. Put that money somewhere else. Just put it in something else and grow value from something else with that money. It's just, I think you just can't, like, for Nvidia to go to where it's going, and for us to be going into the environment that we're going in, which is a slowdown, a recession, they're not going to be worried about AI. Like, you're going to have a real struggle with its earnings when people are worried about liquidity and don't have a bunch of money to waste on making these AI projects. They can always go to the market and do offerings and stuff to raise money. But to say that Nvidia is growing, like this is the time period of growth, Nvidia is going to $1 trillion. It's just not right now. It needs to take a breather. But it's not. I don't think it's going to take a breather until that data starts to show itself, or until Nvidia reports earnings and it's a huge bust. Okay, because unemployment rate's supposed to be ticking up, and it's not going to be the time for that. Companies are not going to want to spend money. That's the whole point of it. Companies are not going to be spending money, especially for innovation. They will spend money, but not as much. It's going to be dwindled. So let's watch Roblox here with this 50-day. You have the 50-day coming down under the 100. All right, so it got bought up. I wonder if that was because of the SPY or not. I'm going to have to go through some charts tomorrow. Let me see here. 1 hour. What do we have? Okay, so it did hold this as support. I think maybe we look for Roblox to reject. If it can't reject 40, let's see, it kind of put in. I mean, I think Roblox has got to be a short. If you guys could help remind me, but I'm gonna try and short Roblox tomorrow, possibly. I'm not gonna force it because if the market's strong, if the market's going to the upside, I want to have a stock that's weak and a stock that's strong, and I want to take it to the upside. I don't want to just be fighting the trend and swimming upstream. So this level here became support. It kind of hasn't broken it, but let's see the 15-minute. Again, I'm going to go over some charts tomorrow morning. I'll have to look at some later on tonight. I want to look at like Boeing. I want to find something that's like this. Like, look at this, guys. We get Boeing back down here. Yes. Why did I think Boeing instinctively? And now it's going to give us a possible double bottom. Let me delete. Look at this. You got a double bottom right here, guys. Where? Look at this level. Right here. I mean, it's a little bit above it, but right there's a double bottom. Let's look at the MACD to like justify the long. So here's a bottom. There's a bottom. And look at these tails. Look at those tails. So does BA break out? I'm going to do a little bit more work on it. I was kind of thinking BA had, which is Boeing. I thought it had to like pull back a little bit into this pennant that it was forming. So maybe I'm a little early. But I don't know. Because this was a massive pennant there. That was massive. Technically, because of this, I don't know. Look at that stair step. Boom. The thing is with this pattern here, this ABCD, A, B, C, D, you usually will have an E. But look how this went lower than this. So I could look at it in a couple different ways. Like I said, I'm going to get ready and try and get a little sleep. But let's look for BA tomorrow. See if we can get... let me see. I want to find something good, guys. I don't care where I got to get it. I'm going to find something. Whether it's got earnings or anything. There were a couple stocks. If you go through earnings, I think I have it right here. There was a couple stocks that went off. It was, today's Wednesday, Lennar. Lennar is what it was. You have some weed stocks going off too. Not going off, but reporting. Lennar, that's what it was. So write down Lennar, guys. Lennar, yes. This stock had a massive, at least when I was watching it, a massive upside after the bell in its earnings. Yeah, man, I'm going to bed too, bro. I'm crashing too, man. Look at this. So look at this pivot high. We broke above it. Now it's holding it as support. Boom, boom. Oh, I don't have it on. So this is one stock I'm going to be watching tomorrow. For sure. All right. You have your pivot high. Double top. Couldn't break it. You broke it. It pulled back, and now it's sitting on it. So time will tell tomorrow. You guys have a great night. Thank you guys so much for joining me. I apologize about my camera. The camera wasn't working. It should still not be working, I don't think. Yeah, I turned it off. You guys have a great night. Think about... Yeah, man. Oh, no, CO... What is... Is that the ticker? COHR? Yeah, it did. It had a big day before. Yeah, look at the morning. And... What's this company do? Coherent. Do you know what they do? Let's see here. No. I'm gonna take that out. We deliver innovations that resonate with our classified applications, industrial communication, electronics, and it's a global leader in materials, networking, and lasers for industrial communication, electronics, instrument markets. Okay, cool. All right. Engineer some type. Yeah, exactly. Yeah, I see that now. I feel like just from what I read, they cut keys. I'm just playing. Up to 25. Yeah, it is. It did go up, man. Oh, no shit. Wow. Yeah, because it looks like they just had earnings. And off of that earnings call, they ripped. They ripped off of that earnings call. Look at that gap up. Nice, man. Nice find, dude. Nice job, bro. This is what it is. This is why it's awesome out of group. You know what I mean? That's what's up, man. Round of applause, dude. Great job. Nice job, man. Nice find. Look at that volume too, man. This might be this is another picture of a blow off top. Yo, did they mention AI? Tell me that they ain't mention AI. You know, GameStop could use something from these people. You know what I mean? Just say something about AI. You ain't gotta take questions, do anything. Just drop the mic. Just get it. Say, yeah, we got some AI in the works. See y'all next quarter. Drop the mic. Stock would have went flying to the upside. They couldn't even come on and say AI. They didn't even want to come on. Not that I care what GME does, but, you know, it's just funny. The opportunity. These companies know. This is their job, to get their stock price up, because the job is to raise money. You know? And this also, what this also does is when your stock price goes up, your market cap of your company, what your company is worth, also goes up. So what's that mean? You want to go to the bank? Well, if you're worth $1 million, you're going to get what the bank's going to give you for about $1 million, or, you know, you're at least good for $1 million a quarter or whatever, or a year. And you go to a company that's got 100 million, well, chances are they're going to get more money at a lower interest rate. You know, because they have more money, they're more liquid, and you are less liquid, whether whether you're good to pay your bills or not. Like, so you know what I mean? It has its reasons. So your stock, there's so many reasons I probably don't even know half of them. But I do know when your stock price is up, your market cap's up, and that's a good thing. You know. So nice find there, dude. So what I'll probably do tonight is I'll probably go to bed, obviously, number one. But one of the first things I'll do is, like, I'll kind of, like, I'm just going to go through and see what was what. I don't know, maybe I'll go to the heat map or something and, like, see what did what. Like, no, I don't want no fucking images. So we do got a little bit more red. Let's go look at the world, because I'm trying to remember, because I've been coming on late. There's been a lot of shit going on. it really helped. Like when I was on the last time where we saw everything red, and then it shifted to maroon, and then went to green. Like we seen the change, and now it's kind of like, what is this? Oh yeah, Toyota's been ripping too. There was news out with Toyota 2 days ago. I just haven't played it. Bud, Anheuser-Busch. Why is it in Belgium? That's so weird. I thought it was like St. Louis or something, that Anheuser-Busch. I thought that was in the South or something like that. I have no idea. I don't know why I didn't know. How did I not know that Anheuser-Busch was from Belgium? I thought it was American. Is this just like this is Bud Light, right? Bud, as in Budweiser, Bud Light. That's so weird. That's so fucking weird. Dude, Budweiser needs to be in the United States. I'm going to take it and put it over here. It doesn't belong in Belgium. It's not a domestic beer or imported beer. I don't know. Oh, let me see something real quick. Roblox. So Roblox did have some cool stuff that they said on their earnings call about that they spent $400 million on some software, like just they spent $400 million on building and putting in place a system to run ads. So it's kind of like Meta. You had like Meta went and did some. So like again, I got this from somebody else. I didn't come up with this on my own, but he sat through the earnings call and had mentioned. This is a guy that I really look up to. He had mentioned that like Roblox went through, spent some money. They put in place this system to be able to run ads through their platform. Okay. And it's kind of like he like related it to like Facebook when they IPO'd, and then you have the 3-month drop, share unlock. You build a base, they spend some money, and once the ad revenue goes, and he said that we'll see it this quarter. So we'll have to look at Roblox quarter this next time, and then the one after that. So that's just a lead tip for Roblox. Watch out in the future. It looks like they're going to be getting some advertisement money, possibly. At least they're setting themselves up for it. So, all right. So this thing is still kind of down because the IWM is down. I should have already known. Shit, it just was in my head, and now I forgot it because I'm a little tired. I think that'll be it. I think that's going to be it. What was it? Roblox and fuck. I looked at IBB. See, EEM is not really liquid, but look at this thing, guys. Here's a stock for you. Builds the base. You're supposed to buy in weakness, but it broke out already. Now it's going to the upside. All right, that's EEM. Yeah, I don't really have much. I'm gonna have to wait for the morning to come up with something because I'm all out of Microsoft or Nvidia. Nvidia is a killer. Insane. All right, guys. Thank you guys for joining us tonight. Collins, have a great night. We'll see you in the morning. I'm going to get to these charts in the morning and get busy. We'll come up with some tickers and all that fun stuff. Thank you guys so much for joining us tonight. You guys have a great night. We will see you in the morning. Have a good night, guys.